Okay, so I got this email here. A guy said that he spent $400 for a course and he regrets it. Never again. And he goes, I want to learn. I'm having information overload. I have no idea where to start. Can you guide me in the right direction? Okay, so it comes down to this. If I was going to have a course in trading, it would look like this. You're going along in your life. Everything's fine. You've got a nagging wife. You've got a room that's got drafts in it, and your car runs perfectly. So sometimes things are perfect. Sometimes, and people are typically are either intrigued by the market or they want to make money. I say, if you're going to say on a spectrum of who you are and why you would even bother with this shit, what is that first filter? Do you like a challenge? Are you a gambler? Are you and this is just the funniest thing I ever heard in my life, a serious investor? Yeah, because if you're just having fun investing, well, you just can't. But that's who wins. The people that are having fun win. The people that are worried about the outcome are totally fucked. In the sense that even if they get there, it's a hollow victory because you're like, okay, and how much time are you going to spend worrying about things that you can't change? So you haven't planned for the marketplace presenting prices in such a fashion that your system, or now I'm talking to people that have traded with systems. So the problem with explaining how to trade is that you have to take it down to the view of first principle is, the fork in the road between, are you doing it for fun? Or are you doing because you need the money? If you need the money, it's a huge problem because the pressure to perform, if I said to you, well, you've got like 8 years of music theory and write me a hit song, you're like, well, I'd say, well, you should be able to do that in one day. You know so much shit. So the amount of information that you have, even if you knew what the bankers were, I've had people tell me, oh, I know exactly. I've talked to people that work at these banks. They're like, yeah, I know in the long run, you can go watch this Norman guy. He's a fundamentalist. He's funny. He's such a fundamentalist that he'll tell you, well, see, in the end, I'll be right. Okay, but what about now? What about tonight? Coming into this is, I'm going to put up my clock. I'm using the 4-number clock. And so here you've got the market's been open for all of coming up on an hour and 40 minutes, hour and 40 minutes even. And I still have on this chart, I have not deleted my entry. Now you could tell me this is optimal trade entry, but I did move my take profits on this. Then you can tell me, oh, it's a demo. Then you can tell me, yeah, but the thing about trading is, did you place your orders in new lows and new highs to go the other way for your reversal trades? Did you place your orders bracketed on your low volatility breakouts? And did you look at the clock every fucking hour to do your market orders? So there's only 3 things to even worry about in this fucking business. You're either a guy, now I'm talking to people. See, now the problem with explaining it is that, okay, I have to go back to the beginning. I'll keep going back to the beginning. So the fork in the road is, do you like to have another relationship outside of work? So even if you were going to go bowling, people say, oh, how would you go bowling? Well, there's 10 pins, you got a ball. So you're trying to take them down as efficiently as possible. And people are taking that mindset to trading. Oh, well, there's only 10 pips per 100 per 10 pips. There's 10 in a 100 pip range. There's 10, actually 11 handles there. In the simplest terms, if you were to just say, well, I'm going to put in a now I'm going back to assuming you know what a pip is, or like an increment price. But if I had a grid of catching I got 10 bear traps. I got a point at which these traps are no good. Once the animal gets beyond that point, you can make any metaphor you want to describe what's going on. You could also look at this as gridiron. It's a gridiron football aerial view of the 10-yard lines on the football field. You have a 1,000 pip range you're trying to trade. They're going to pull the ball back. This first down. I mean, you can lay any fucking metaphor on top of what's going on here. This could be the aerial view of a football game. People describe the market as going up and down, so that destroys that angle. If you were going to portray that to somebody to explain it to them. And the momentum that the team has to pull on it is, I have a three-period RSI on that. Another thing that's critical to me, always has been, is the color I choose for the background, because it can make me focus on different aspects of the data. Am I looking, and I'm just doing the classic chart is marching forward. All the new data is coming in on the right side of the chart. The left is water that's been treaded, and there is no more any doubt that this market has gone down. I don't know how many pips these are. Maybe it's, okay, it's 100 pips. So this has gone down 200 pips, retraced 200 pips. So we've got complete reversal. The question is that on the weekly chart here, did you pull the trigger every week it was down past a threshold into, now I'm talking to people that would have know what a chart is. But that you always have to come back to the principle of, and so now you've determined that you want to trade just for fun. And that doesn't mean you're going to make money. But the fun mindset has to be, you have to enjoy the process of putting in the orders, also you have to enjoy not knowing what's going to happen, which is not what people are trying to do. They're trying to find out what's going to happen by using Fibonacci and all this bullshit. Only because in a 5 decimal incremented market, to put a fib handle on the weekly gives you about a 20 pip entrance on a very specific place way out in time that you may never see. So you're planning a vacation for something that's like 50 years away. Like, if you're going to plan your vacation, how far out are you going to book the tickets? Well, typically the way the herd is, it's like 30 days. If you don't book your plane tickets within a certain, I'm sure it's just a natural thing. The algorithm, the airlines know kind of, or they could just see, the plane's filling up. And of course, the people that are getting on board these markets for whether it's consolidation or distribution or accumulation, those phases there is when they're loading it, and then the plane does go somewhere. But everybody's worried about the destination because you have to pick the direction, because if you're short into a long market, you're getting killed, and you're scaling in maybe in a reversal, but you're not mentally prepared to be this Michael Norman guy where you're going to be SEAL Team 6 about it and go fuck them. So if you do have an angry side, and then I'm trying to muster through this Forex Hangout guy, and of course just trying to see what he's looking at. He'll do this. I can already see how he thinks. If this rallies to here, I'll sell. Okay, well, my first thing is, then why aren't you buying here? Now I'm going to go back to the market here. I'll go back to the beginning of the thing. The beginning, of course, it's one of those movies where they're always doing but if you bought here, if you're going to sell here, and you sold because it closed up, and you put a too tight a stop and you got stopped out, it doesn't mean you weren't right in the end. There's just so much going on here. Now I'm going to go to advanced trading. This is a doji, clearly. You have RSI 3 period is just smashed to bits. It's probably at 0.3. This is your first divergence. How many period is? If it's 2 to 5 period, it's very powerful because it doesn't. It's like the last gasp of the market. So it's like 1, 2, 3. 3 period divergence is what you call this. I'm using the Cardwell, Constance Brown lingo. And it's against this. Now, You almost have to be on a 3-period RSI here to get it, because if you're on a 14, there's no way you're going to see this divergence. But this is for people that want to trade right up against what's going on the clock. And as soon as it closed here, I think you had, see, there's no divergence here, but when it closed this week down, boom. And it's an inverted hammer if you can see. I don't count the opening of that. It's an inverted hammer to me. And I say this is cleans up. This is also another thing this guy said to me is he's information overload. There's very little information here. There's only high, low, close. The open does not matter. We have the open here. It's the last close. The problem with candlesticks is you have a open. You have the open does not matter on an hourly chart. What matters is, did you make a new low? And so another thing the Forex Hangout guy says, it just drives me crazy. He's like, we're making a new low. It's making new lows till it's making a lower low. So what? Duh. You're looking now. That's true hindsight insanity. Look, it went down here. It went up. Okay, but what about that up? Is this a fake breakout to a reversal robot? Well, if you know what a reversal robot would think like. There's so much information here on this chart. You could spend fucking a week talking about this fucking, just right here. All the fucking shit that's going on in here. As far as how big are these bars? Where does it just nick it on the other side? Where's the lowest risk entry you can think of if you let the market tell you how much to risk? Another thing is people are coming at this thinking, well, I want to make $100 a week. Well, I mean, you got to pick the currency that's calibrated to the size of the account that you have in that. If you have $500 in an account, yeah, you can make $100 a week like a fucking idiot, right? You could lose 200 and make 300. You're still making 100 a week, right? You can just make gobs of money and actually lose gobs of money, but you're making bigger gobs of money. It's just like a real business. You've got this fucking overhead. 30% losers, you're 70% winning. If you're able to, and this is one person making 70%, which means another thing this Forex Hangout guy said drove me nuts is this guy in the chat says, he says, I have a sample size of 25. And Forex Hangout guy says, oh, you got to have at least 100. Then you got to back test it across this. And no, I'm so sorry. That doesn't fucking matter. Can your brain fucking back test though? Are you going to take those trades real time? When I heard that shit, when I was studying all this stuff, spent thousands of dollars, way past 400. Like I spent like probably with books and everything, I'd say 10 to 20 grand, airfare and all that shit. And I'm like, can I see myself taking this fucking trade based on this silly fucking moving average? Now, if I had like 0.01 penny for every book written about moving average crossovers and all this bullshit, because it's all bullshit. It's like talking about making a movie, and I say to you, well, is this going to be like a miniature claymation, or is this going to be real giants that are 30 feet tall without CGI? Well, why does it matter? Well, dude, the size. Are you fucking kidding me? I could take a fucking camera that can only see a 1-inch view of the world, and I could build a whole fucking nano world. I mean, how much can I do in a room that's 20 by 20 and make it look like it's 200 miles by 200 miles with distant lights? And I mean, you can build a miniature set. And if the movie sucks dick, you didn't spend a lot of money on that. But people will say, well, but for some reason, people think they got to throw a bunch of money at these markets. I guess they're socialists. They're just we'll just put more money to that. That's a good idea what you got there. You just got to put more money in it. And we just back tested it more. Nothing's going to save you from the future. What's to come is not really. You can claim that you've drawn a channel on your chart, and the market is going to obey that channel, or it's going to respect this moving average. Well, it will to an extent, but not because it sees it. because you've found a way to soften the data to fit your view, your nice calm view of like, you notice they have suspension on your car. If they didn't have any suspension on your car, it'd be like a one period moving average. Nobody wants that in their life. They want a nice smooth, oh, you know, it gets rough, all of a sudden the suspension's fucking smart suspensions fucking kicks into fucking let's go floppy and let's not try to be too tight. Of course, right? I mean, this is the dream of the adaptive moving average. You know, I'm talking technical, but let's go back to the beginning of, okay, so let's presuppose that you want to have, if you are attracted to the market, and of course this is another thing, are you attracted to the market, or did somebody say, hey, there's a great way to make money and it's called trading Forex? Are you doing it because your first principle is you want to make money, or are you like, hey, this is just so cool? Then the second thing I would say is, how much do you spend on things like other things like that in your life that you think are cool? How much do you spend on, maybe you're betting on fantasy football. I don't know if they allow that. I'm assuming people are fucking betting on that. And what is the dollar betting amount? So if your threshold for pain is $2 or 25 cents, my dad used to play poker for 25 cents, I think, or something like that. You know, these guys would have a bunch of quarters and you have rolls of quarters. And if you lost, whatever in one night, did that screw you up psychologically, right? Could you come back and play poker again, or do you have hard feelings and you're like, fuck those guys? So at what point do you feel like you've been betrayed? And this is what Mark Douglas talks about. If you feel betrayed by the market or by some course you bought and you're like, well, I'll never do that again, there's probably something okay, the problem with course is everything they're saying, there's cliche bullshit floating abstractions without any fucking tangible real world execution of the plan they talk about. As far as Hangout Guy, why doesn't he just talk about trade plans on the screen? Why doesn't he just say, well, I know you get in here I don't know. I don't get why people keep avoiding the fucking hard truth of you got to pick a fucking price to get in and out of these markets at. Now that's a real hard. The only way you make money is to enter and exit at a profit. Now this is just really against the kind of the creative fairy tale kind of Fibonacci, Da Vinci Code bullshit that people are trying to. They're just mystics like anybody else. They believe in, like they say, there's no atheists in a foxhole. The people that want to believe in this Fibonacci, if it's a placebo for them to put the fucking trade on, yeah, they'll make money. They'll say I made money from Fibonacci. Yeah, because at least you pick something. What I could never do, because I'm a perfectionist. So for me, I look at stuff and go, yeah, I see that, but I can see all the downsides immediately. Oh yeah, it's great until you. Especially if you're doing this ATR stop shit. Well, ATR 14, I put my stop in. Okay, you've just put an arbitrary fucking stop in. You haven't put a structure stop in. You haven't put a stop in based on the last, I'm going to go technical. You have not put in stops based on what the market's doing now in relationship to what it's just done. So if you have a volcano that fucking wipes out a city and people are like, fucking whoa. Okay, well then the next volcano is 10 times bigger. People are like, fucking whoa. And then you never see anything after that. Well, people are on guard, or in other words, plus that pressure has been relieved. If you look at the market is a pressure building unit, they call it the war of attrition. It's grinding. So you have pressure, the plates are grinding, and then it pops. There's not a lot of depeggings of the Swiss franc. I mean, this is probably pressure that has been building up. If you took an objective view of each compression and each consolidation zone, and the way the market behaves in there, and yes, you could range trade, and this guy was also saying, well, I just range trade the market and I get out. That's not very sexy trade plan, but it probably makes money. Well, there's nothing really grandiose about trading a range. In fact, what you're saying is that 80% of the market's bullshit, I'll make money from that. But if you want to be the guy that says, I told you the Dow was going to 20 grand. Now, if that's working in your head as a way to, another thing that attracted me to the market was people said, well, you can't, it's just too much. I said, great, let's go. It's too much, let's go, let's see it, let's see it. And then let's say people say, well, 90% of people, when they say retail, I think they're saying like 90% of hunters that go out wearing, smoking a cigarette and trying to kill deer. But like, at some point, that's a different story. But in other words, if you just jump into, I'm going to play guitar, but I don't want to learn how to tune it, or I'm going to have somebody tune a guitar for me. Okay, what's going to happen when that guy's not around? This is the argument from, if you teach a guy to fish, you'll feed him for life. If you give the guy fish, that's why I would never do a signal service, because people would say, well, why am I entering at this price? Well, I got the fib tool and everybody's got the same fuck. I mean, you can laugh your ass off if you go from, okay, well, only laugh your ass off because you remember when you used to think like that these golden ratios and that it's a self-fulfilling prophecy in the market. That is the argument that the market can see itself. That it's a self-fulfilling prophecy, and that the whole herd is in on the, well, if that's true, when the big moves and everybody's in on that, I thought 90% of people lose. Well, they lose for different reasons. They would be over-executing, over-trading it, over-stacking tickets. The size would matter. Sure, you could have a large mountain that you built in your movie that cost you a lot of time, and then you can have small characters around it. So you can have a blend. You don't have to be all or nothing either, which is a difficult thing to accept. For me, being a compromised person means that I'm saying that it's okay to be like, I don't know what the fuck I'm doing, and I also know what I'm doing. Well, but you would never know. You don't know what you don't know, so you really can't feel bad about the future of the prices unfolding the way they do when you don't even have a clue as to what maybe has just happened and why things happen the way they do in the markets, why it behaves the way it does. Because it really is about expansion and contraction of volatility over time. It's not so much about the direction it's moving for any fundamental reason, necessarily, because if the void exists above or below by millions of pips or points or ticks or whatever the fuck it is, that's going to be that'll be the uncharted water, in the sense that there's pressure built up there because you've never been there. And when the price goes into that, I think psychologically what happens is people don't know how to value it. If it starts to go very fast, very hard into new territory, people don't know how to interpret the price. Whereas if the market's ranging, this is the old thing when people say, well, support and resistance doesn't work. Yeah, it works until it doesn't, just like this trend theory, making higher highs and higher lows, that it's a trend until it's not theory, but you can counter trend trade it. And then I remember seeing the guys saying there, oh, I was counter trend trading because I try to muddle through this. I can only go like 10 minutes at a time. And he says, well, the market, he goes, I did a counter trend trade and lost. Okay, but how tight was your stop? Now, this is just a mathematical issue. And of course, each market has its own risk per pip per size. So unless the broker's going to let you trade nano, and there are brokers like you can go to Orlando and trade $1. I mean, you $10 position or something. Of course, people don't find that to be very gratifying for the amount of work they put into it. So the first question is, and so I was pretty pissed when people asked me this, is why are you trading? And look, to make money, fuckhead, are you nuts? Like, what are you nuts? What stupid fuck, who is this guy? I mean, that's how I felt about it when I was hearing that, and people were the psychological trading coaches were asking me, well, why are you trading? I'm like, what the fuck, who is this fucker? And then people are saying, this guy doesn't even trade. Who the fuck are you? You don't even trade. Like, and this is the reason I get this attitude from the people that want me to trade real money, exposing all the accounts or whatever I'm doing, and what I'm, I mean, when people start, it it wouldn't matter because you're not going to have the same comfort level doing certain things. So some guys can go to the gym in the morning and they would work out. Some people are going to work out after they've worked because they're like, okay, now I can go to sleep. I can work out and go to sleep. Not everybody's going to have the same. And so you could make money trading like a goober with just trading breakouts and Fibonacci. But this would also mean that you'd have to be so fucking diligent in that one technique that you're going to go through some. Okay, you could say at the end of the year I'm up 70%, but there's going to be 1 month where you're fucking down like, and this is going to be the big deal here. We come back to square one. How much can you handle being up or down per month, per hour, per minute? How much of your equity you want to see fluctuate? So the bigger that number is, the more money you would make. And so you're always confronted with the fact that the more you risk, the more you would make if your ratios, in other words, you just keep pulling the trigger and you don't have to be right like 40% of the time because you've got such a spectrum of stops and you're getting kicked out of small losses. But in other words, if you consider getting stopped out of 100, you lost 10 cents and then you lost 30 cents. Okay, what's going to be more? How many more times can you lose with 10 cents? 3 more times. Okay, you can have insane numbers. And I didn't think that was possible either. When I heard that, I'm like, you mean you could be right 40% of the time and just make more money than the guy that's right 70% of the time? Yeah, because when he's wrong, he's getting crushed. Right and wrong has nothing to do with making money in the sense of that. And that's very difficult to understand. It doesn't make sense at first till you put into, so if I build 10 Hollywood sets that are miniatures, or I even get the 3D printer to copy that scene, and I make miniature sets, right? And I do like a claymation video. If I lose a set to a fire that I start in the set trying to do my pyrotechnics, no big deal. I got another cheap backup. But if I put so much into that scene and it fucking crashes, and it's a big scene done outside with real, then what? I'm still telling the story. Like, that's why cartoons, you can tell the story better. Like, if you're watching South Park, you're paying attention to the dialogue. I don't know if that would work with people talking to each other like that, because like these people are just fucking bullshitting. But there's something about the, and that's also, you go back to what you're looking at on the chart here. It takes some explaining, some mansplaining, because it is a 3-period RSI. It's a relative strength index at the bottom of the screen there. And you'd have to try this. You could spend I spent $2,000 with the whole course on this. And I can explain it now, but always coming back to the comfort level of what you feel like risking, dollar-wise, is always going to be the final thing that makes you either get out too early, or stay in too long, or risk too much, or all the things attributed to not being, well, when they say treat it like a business, you're presupposing that people that own businesses have their shit together, as far as that goes, and that all businesses make money. So if you trade like it's a business, that doesn't mean shit. People can, there's so many words that have meaning that it has kind of, it's leading you. It's like leading the witness. You're really making it difficult to be flexible in your approach. It's hard to unring the bell of everything you've learned about, especially if you think that the banks, and this is the ICT argument, that, they know where they want to take the price. When I hear that, I'm thinking, they know where they want to take the price. Well, why didn't they just take it there yesterday? Well, they didn't have enough loser retail guys on board. Really? Okay, I've sat through many of a situation where it's the guy that can trade at the comfort level for the long term, and he's a long-term mindset guy. And the guy that can just scalp and make chunks of money. And also, for the most part, these people don't trade each other's systems. As far as a scalper, probably won't be a swing trader for his most successful trades. For what he's comfortable being in a relationship with a position in the market. So I also heard the Forex Hangout guys say that, he doesn't really say it's psychological, but it is. How long, the discipline factor and all that. These are just nothing but ridiculous. When you say to be a disciplined trader, like in what sense? Everything has a sense to it. You can't just throw this shit out. I was curious to see this course this guy got for $400, so I emailed him back. See what he got. But, all these courses, and you would think if you pay more, it's going to be better, right? Okay, he just sent me an email back here. He said, I purchased this dude's lifetime course, Texas West Capital. Some good information, but all TA stuff. I didn't even finish it. I have buyer's remorse. Dude, you're the only person on the fucking internet. I don't know how valuable my content is. He said, valuable content? People get pissed because I'm making fun of other people's trades. So I'm going to answer this guy in the video here, I hope. Of course, everybody's asking the same question. We all are asking the same question every time we step up to the plate, so to speak, in these markets. Anytime anybody has an idea of a trade, like I said, if you take it back to you're paying for losing per idea. So if you go back to this building a Hollywood set out of miniatures, if I had the idea that I wanted to have a character look like X, if I do a mock-up demo, dare I say, of the character in a small 3D printout, and I say, okay, that's what he's going to look like, I've got him established, and I can live with that. In other words, if I drew an entry point on the chart on a 618 down here, God forbid, if I said, start hearing me say shit like, well, you can clearly see this is the 618 from the, I'm starting my fib here, and like, this is obviously the end of this price pulse. And for whatever hindsight vision here, we can see clearly the market has given us the clue that it did stop here, and it did go up. As soon as it closed up here, this is this is written in stone. This fractal has been completed, in my opinion. I'm not waiting for this fucking Williams shit. See, Williams would not put a fractal here because we don't have a thumb and a finger. He's putting his fractals on the edge of the river. I mean, it's ridiculous. If I'm going to do it on the clock, as soon as it closes up, I would sell that. If I think that this is a down move, I'm selling every fucking retracement. Fuck Fibonacci. But I'm saying you could say, oh, well, here's my, my Fibonacci is here, and look, I nailed it. Okay, but what, you still had to put a 20, you still had to, this is 100 pip handles, you still had to put a 50 pip stop on that. Inside of here, and I'm just going to jump around, but this trade here made money, but it could have made way more money if I'd stayed in. And when it came back here to retest, did I get stopped out of something? I don't know. I can't see this. I have to go to the daily for that. So a lot of things here. Now, the daily here, you can see the entry looks a lot easier based on that. And we knew our target was going to be this previous low in wick and low in close. So the wick window, I call it, on either side of this. I guess this is where I'm going to lose people that are saying, well, explain wick window. Okay, I would just say, well, it's the wick. In other words, from the close, this whole thing here, see how it pokes into the close there, but from this close, all the wicks above that close, that's the window of wickage. And the same thing on the bottom here. So if I had this marked off, I just use the boxes on this thing. If I had this guy on the close, on the peaks and mountains, so I have it like this. That is, anything outside of that, the close is the wick. I guess it sounds so stupid and simple, it's difficult to explain. So it closes here. As soon as it goes down, everything above here is this territory where it's been known to go in, not close up there. And people would say, okay, here's the argument I'll hear, and this is for people that understand this entry. I've seen every entry criteria. I watched so many videos, and I can already tell you what the criteria would be here for this one guy called the Naked Trader, some guy out of Australia. I mean, to me, he's just a doofus. But he's only making money for, what he'll do is this entry. Don't forget, this is the daily chart Australia CAD, and he'll wait forever for this fucking setup. But he can tell you it works. He's waiting for this thing to come up here and do this engulf. And he might even be waiting for this fucking engulf and his pin bar bullshit. Pin bar. Okay, great. You're getting in here and you're going to put a trailing stop and you're going to tell me, dude, I just made this much money. Shut the fuck up. Okay, but why didn't you fucking get in up here in this hole? And I think that's where I'm never going to, in other words, I can see both. I can see this hole, this is the jigsaw theory, that the market is more like a Jenga theory. I don't know what Jenga is. Pressure builds up like here and something's got to give. Pops up, doesn't no follow through, and your buy stop, I'm going to describe a million trade plans here. Each of them would have made money with the right stop and everything, and would have lost money with the right stop. If you had a buy stop here, no harm, no foul, you were never filled on the breakout of the largest structure on the weekly. And this is when people would say, well, I could put a buy stop on the weekly and look, I made money. Yeah, if that thing crushed through, because they're also telling you, if I put a sell stop here, and this is, by the way, 1 month from here to here, if I put a sell stop here, I made money just like the guy that waited for confirmation of this to close down into an engulf, and he's like, I'm selling. I'll put a sell stop here in the next fucking, because as soon as it breaks this, it's going to continue down. Okay, Poindexter. That means you put a 100 pip stop here and you're riding it down and you made, in other words, one ticket. Poindexter trades one ticket. Typically in the kind of stuff I see, it's always a one trade entry too. You also have the argument, and this is also where people get trapped up in this overbought, oversold shit, is, yeah, it's oversold, and I can tell somebody, when it gets below the 20 and the 3, just start fucking buying it. Okay, so they bought. They never buy when it's going up either. They only buy RSI when it's closed lower. So if you're buying weakness, you're also technically buying the trap, and this is, I suppose, the really extreme low. Plus you're buying in price here. You're accumulating down in here. This also is based on you buying into a downtrend. Okay, so how do you make money in that trade? You have to have the right sizing, and you have to be able to psychologically be many pips underwater. And if they're even past if they're all standard lots, then you have to have the ability to be down a few bucks. And what is a few bucks? So once again, coming back to the beginning, what is your threshold for pain? You spent $400 on a course. Now you go through that course, and I can probably estimate that everything in here there is canned. They've taken an indicator like this one, and they described entries to you, but they probably did not describe the one thing that I see missing from it's like the angry photographer guy, but don't see anybody talking about volatility, which is how to use it. I mean, how to the volatility is the market talking to you in terms of its dynamic range. So say you got some singer that's sings falsetto, you just have to crank their mic up, you know. They're going to eat the mic typically. They're going to compensate for that. So how are there people that sing, and they know they're going to sing loud because they want to hit the note, they hold the mic away, they'll actually be their own compressor, I don't know if you know. So people that really understand audio will compensate in the mic distance for the way they're singing. And some people are just, they're going to let the equipment compress them. So are you going to let the broker compress your trading? Are you going to let the broker? So you also figure that putting all your eggs in one basket is supposed to be a no-no. There are some cliches that make total sense. And this is when diversification would come into the picture. And if you're only trading the Eurodollar, you can still diversify. You can have a trade that's designed to make money on the so-called London breakout system. And it's not like that wouldn't work, but you'd have to run this. See, if you're running 10 systems, which is overwhelming to somebody that's never traded before, they're like, I just want to trade one system that works. Now, this is also, you're going to fight against diversification by saying, well, that doesn't make any fucking sense. Give me one gun or give me one pill that I can take that'll make everything fucking beautiful. Well, there isn't, because you're going to need a pill, or one pill to make me larger, one pill to make me smaller, or two pills. When this one, I'm ramped up. This one lets me go back into, and I'm gonna control my. I'm gonna go against nature and control my own self. But you can't do that because you'd have to take a nap or sleep. The market's going to take a nap. It's going to go into Asia and it's going to go sideways. We're all aware of that. But when the animal wakes up in the London session, which way does it run? Like I said, it comes down to metaphor. You probably are not going to see the same metaphor as another guy, but if you connect with some people are going to say this guy's course is great, only for the sake that these people found a safe connection in trusting what the fuck the person's telling them for whatever money they spent. But typically what happens is you're not learning about how to trade the market. If you watch these people that are talking to you about the market, of course you have to kind of profile their, like I said, why don't the golf pros at the golf course go on the PGA Tour? They're probably better than the guy they're teaching, or they wouldn't be teaching him. It's because they don't want all that bullshit. They don't want to stay in hotel rooms. They just want to stick in town. They got a family. They don't want that drama. They don't want to end up like this golfer, all these Swedish chicks. You know, they don't want the temptation. They don't want to have the living away from home. So people find a niche, you know, and they say, oh, you know, I know how to, like, I could say that. I could say, well, I could just write books. But people probably say, oh, that makes so much sense. Thanks, you know. And why isn't he running a big fund? Because that's all that stuff is that's when you are basically saying, well, I'm going to write music for fucking, you write an opera and people are like, would you like to do another 10 of those? You're like, well, I don't know. You know, go watch A Star Is Born as your classic, which is just an amazing movie because it's just a really beautifully cliche situation of going down that path of, oh, you're a pip star, you know, you're able to make so much money, this, that, how do you do it, and what's your secret? It's just so funny that people have gotten so, they don't, they call it self-esteem apparently, but you don't really value their own opinion. You don't have enough. Well, especially going into a topic, like I can't not say, I don't know anything about computer programming, but the language, if you knew a computer language inside and out, but I've seen people that write computer languages that say, oh my God, I can't even believe what I'm missing here. Everything has a blind spot. I guess the idea of somebody that was going to watch you trade, they were going to, in this, supposedly this Sue Lee guy is giving courses on trading. Hopefully it's psychological and not technical, because technically, I mean, or trade plan wise, he's not in that. But if you're going to have a coach that says, I had a broker that was like a psychological coach. He didn't know shit about, I don't think he knew what a trend line was, but he was just like, no, don't worry about it. You'll make it back. I mean, if somebody just said to you, oh, you can just keep, what you did wasn't wrong, but I just lost like 10 grand trading. Oh, well, okay. It's all right. You're still here, right? It's really not a good, like, but just like the idea that you're going to be a businessman, well, a lot of businessmen, they get fucked up. Some people, they completely blow up the whole fucking company. And they go bankrupt, and they owe people money, and people are calling, and they're like, what the fuck happened? Oh, well, it seemed like a good idea at the time. And all these business models people come out with, So you've got all this. I bought many a book other than a trading book. I bought books like on self-improvement and stuff like that. I went to a Tony Robbins course. I did all that stuff. I've done hours of martial arts. And I always did martial arts. The whole reason I was doing that was not to defend myself at the titty bar. It was to become a better thinker and more resilient to losing in the market. Because I figured, well, this is the war room approach philosophy to trading that you're going to be so fucking mentally tough. And this is the SEAL Team 6 thing. But you still need to have a tool of perceiving time in relationship to fluctuation of prices in the market. And that's a complicated thing because the distortions that people want to put in there with Renko or tick bars and compress reality to fit their liking. I just found the tick bar charts or Renkos or point figures and all this distortion of data to make things worse. Moving averages to try to extract the trend by putting a filter on top of reality is not, for me, it didn't work. Because I said, no, I don't want to have somebody sing into my tape machine or my hard disk recorder pre-compressed. I want them coming in raw, and I'm going to fuck with it later. I may not have to fuck with it. I may just think there's nothing better than this raw fucking thing. And you want to improve on it because you've ever seen this commercial where they say the new and improved? It was so cute. When I was growing up, I thought, well, here's these things. Here's Excedrin. And then this bullshit came around, and this is, I guess, a scam of just you run out of ways to sell stuff. Well, this is like they have it in trading. It's called the Master Trading Course, or how to master this and how to, it's this whole like I'm going to dominate this field. But they had like Excedrin, then they had Excedrin Plus, and they have like the new. New was okay, but then that wasn't enough. There was new and improved. I say the new and improved Master Forex Trading Course. I think if I was going to do it, I'd have like the most fucking elaborate. It'd be an acronym. It'd be some elaborate fucking intro. It'd be the Ultimate Trader's Mastery execution. You could just new and improved twice. Version 8.28. Final version, no beta. And people are like, wow, oof, and that's 10 grand for that course. Well, dude, look at the fucking title. What the fuck's going on in that thing? I mean, it's like so buttoned up. Yeah, it's just so worth it, man. And of course, don't forget how many people signed up for Scientology because of the fact, and I signed up for Scientology, I admit, for about 3 weeks, but because there's something there, and there is this belonging of like, can you explain the universe to me? Okay, you did, even though it's ridiculous. Okay, I feel safer. Thank you very much. Because to go at your own or to make up your own rules in this market as you're going along is not the typical. Most people are their first filter for not doing that is that they're risking, quote, money. They're not risking time. Now, if I build miniature movie sets in here, and after 8 hours, what have I risked? I've lost time guaranteed. I mean, I can't get that time back. And I'm making an investment. And somehow that, for some people, they can handle that. But to step into a marketplace where prices are fluctuating randomly, they're randomly. Is the next tick up or down here? Anybody want to guess? Okay, if I want to go 1 minute chart, is the next tick up or down? You can play the game. You can play it. You can just stare at the chart with a real account. In other words, it's a demo account until you pull the trigger. If you're observing price before your entry, so you're a demo, whether you like it or not. This is the 1 minute RSI, by the way. I would say, okay, what's the next thing? I say up. I say the next tick's up. We just broke out this 1 minute bar and we're going up. Okay, I could be wrong, but you can play that game. But you can see if I bought it now, it's not a breakout. And of course, we're going to go technical again. This is the ask price, and you would have had to buy right now at this price. It's not a breakout. The spread's 2.5 pips because it's Australia CAD and it's Asian session. The spread sucks. You can't take this trade plan of I'm trading breakouts in the 1 minute chart down to the Asian session on Australia CAD on this broker, because you're getting filled here and you're underwater. The market has to go to here for you to get even. That means the ask will be here. And who's getting filled here? Somebody's getting filled on a breakout here. If they place their order on the new highs, breakout traders just got trapped. Right? They're getting filled right now. You can see it. But you can't see it unless you go to that MT7 where you're looking at bid and ask charts. So you'd see your ask chart is getting filled there. You're long. When people say, well, work on the 1 minute chart. Okay, great, but you can see how many signals there are in here. You're going to just get butchered to death. So a lot of simple things like how much does it cost you? And if you are going to trade for the next 5 years and try to make some money, that's the really hopefully you're at least paying for, in other words, say you only made $40 in 5 years. You could say, well, that was very entertaining. I mean it's better than spending money going bowling, because I'm spending money. I mean, I'm actually up and I've been having fun. And Asia's going to be right now the next. Okay, so now it's 7:30, and we're coming in. The next hour is going to be a big deal. The bottom of the hour is coming here in 30 seconds. So we go to the half-hour chart. It's a different story. The spread still sucks on the half-hour chart, but it doesn't look as bad. If you put and this is a bid chart, I guess that's a big deal, because it is a different. If you're going to strictly put a sell stop here and a buy stop here, you're actually going to get filled on this one. This is a bid chart, so it's not fair, and you can see the spread's this big right now. And right now you're at break even. If you actually got filled here on the sell, you are just not even hardly making money right now. Even though you're right about the move, look how right you are about that move. And this is your argument for the RSI negative reversal sell, although you're getting really thin here. It's kind of, you got this huge vacuum forming here. This one's been filled. As soon as Asia opened, the spread probably went to like 5.5 pips here. And that's why this looks so big. So it's not really a true representation of volatility. And what is their time frame for filtering volatility? If you go to the 4-hour chart, each broker has its own maybe starting time for that 4-hour starting and end time for that 4-hour chart. So what can the range be within that? So the daily, and maybe your broker opens up on Sunday and you get a baby bar, so it's a little distortion of that. So the 1-hour chart. That's 24 bars. It's very simple. I couldn't compress the data. I could kind of take it down like this to show you entries on the RSI here, but it's still too much data. Here's about as much compression as I can handle. So that's 2 zooms out from total zoom on a MetaTrader. So here I can see the all the little zigzags here, and I can see some divergence and some reversals. And that's too complicated. I don't think you need that. So I'm going to take it off to explain the market from a technical standpoint, I guess you call it. But you always got to consider, okay, so here's the thing. How many trades do you want to do a day, roughly? And how much does each trade cost you? So what's the price of each trade? And this is the boring stuff people don't want to deal with because they want to look at they want to look for the cipher and bat wings. But what is the how many trades? And are you going to have it like this where you have drops that or are you going to just manually trade it? Like I could just manually trade this. This is a 2K. Buy limit for a 2K. Buy limit for a 2K. Okay, so let me just do some blockhead trading here. Let's imagine there's $200 in the account, and the account is the stop. This will free you from. And how many trades can you put in this? And forget the scripts and all that shit. Just you can always put a. You can always adjust this. I have this set up so you have to hold the Alt key to get a. But see, I can move that ticket and say, oh, I don't like this. And if the market's coming down towards my buy limit, let me turn the color different. So your buy limits and your entries, your limit orders and your stop entries are going to be whatever this color is, volumes. So I'm going to make that lime. That's my entry price. Imagine the account's a stop, so I don't give a fuck. And I'm just going to, because I don't have time for this shit, I'm going to go, I mean, this is your attitude. This is an 8K loaded in here. Australia CAD. And I could walk away from that, and I could let this is the 1 hour chart, I could let that play out all week long. And depending how I treat getting filled here, and I could actually move this and say, you know what, I want to take this down a little deeper. I don't want to buy that much there. I'll buy just tons right here. If we revisit this doji, if I go to the 4 hour, it's like, oh yeah, I could see it retesting that. That was a launching pad. And in here you can see that you had this sell off into, let's get a real wide area, this area. The precision is not necessary. 618 is not necessary. Anything that's a 4 hour chart. So if you think this is an uptrend, it doesn't even matter if you're right or wrong. And that sounds terrible, but like you could have counter trend traded this too. But let's imagine that you miss this structure where this top becomes a bottom here. This is the top, or you thought this was an auction. You thought this was a trap on the 1 hour. This happens every fucking week on these charts, and especially on the 1 hour, where it comes in backfills into this thing, or they push the ball back to the, start off with the first down again. I don't understand football, but in other words, you start over. You're allowed to have like 4 downs or something, and then it's over. So maybe you look at those price pulses or moves, and then how long if you're looking at the cycle that with, what is that? Well, you can't say, well, because from top to top is typically this, therefore I back tested that tops last this. That's bullshit. Oh, the typical top is this far apart. Well, the price pulse from 2 to 5 is true, but it's time frame dependent because this double top here, if I say, well, we expected a double top here, look, it's double top right. Yeah, okay, it's off by 1 sector. Now what? Well, then you get lost in the minutia of this fucking stupid. Well, this is a tried and true thing that when markets do this, they do that. Okay, when markets do the top become a bottom, it's because of the fact that the buyers here, or this supply zone, or this, in other words, just this price area, why are people buying here? Is it because it came back here, or is it because does the reason matter? Is it because it exhausted crushing into this void? And it also, in conjunction with that, came back to this breakout point. It's all those things. The fact that it couldn't go, people make all sorts of arguments. See, they couldn't go any lower in here, so it's a good buy. All right, but great. How are you getting into the market then? Are you a stop entry? So there's three ways to get involved in winning and losing. Are you going to diligently place a buy stop on every lower high waiting to get picked up in the stream? Here you got trapped. No fill, no fill, no fill. You got trapped. No fill, fill, and now you're in the stream. But if you're looking at the data like this, you're like, what the fuck? That's not a big enough move for me. I don't want to be in this trade. That's how I would view it. If you presented the data like this to me, I'd say, well, what the fuck are you even doing? Where's your trade, dude? So the volatility, how far this market can move is going to make a big difference. So I fixed the scale here so I can make the point extreme as can be, that you don't really see this top become a bottom unless you stretch the fucking chart out. So you can't really see that in time. And look at this little baby stop hunt. I only say that stop hunt because it's just backfilling to this little micro void here. Look how they just nicked that. If you had your robot put a sell stop at the last lowest bid, and to me that's the lower low, the lowest low is that one just behind you. It's just not that complicated. You could look way back to here to this low. You could look at this low. Which low are you looking at? And what are you doing? What are you doing about that low? Is this a double bottom? Sure enough. And when it closed up here, is that the confirmation? Where's the confirmation of this double bottom? Well, I got confirmation here because it closed up. You bought there. Yes. Are you underwater? Yes. Could you be right in the end? Yes. Did you place a buy stop here and you didn't get stopped out because you had a wide enough stop? See, now that's the confirmation guy. You can buy a stop here. He gets filled and it goes up. He does not get stopped out. So he back tests that and he goes, dude, this is way better than what you're doing. I'm getting in on a buy stop with a stop here. And look at this trade here. 60% of the time it's right. Wonderful. How big are you in? And how many of those are you doing per day? And how much time you got invested in placing that order and babysitting the 4-hour chart? So realistically, out in front of time, I'd always say to myself, sounds good on paper. Can I be awake 24 hours a day to manage a 4-hour chart across 12 currency pairs? And some people probably do that. And they just do it religiously. And this is where it's discipline. And they're doing fine. And they probably would never watch my channel or anything on fucking YouTube. And they're just like, yeah, this is what I do. This is also the guy that's just playing guitar in his bedroom. He doesn't jam with anybody. He doesn't even fucking... Maybe he doesn't even listen to any music other than his own. Who knows? There's some people that are like, hey, they're going to copy every rig some famous guy has. They're going to buy his guitar. They're going to buy the Eric Clapton Stratocaster. Look, dude, I got the Eric Clapton. Great. What about you? What are you doing? And so, torn between taking expert advice for somebody to charge you $400 for a course. All right. And I just don't understand how these people can give these courses, can do these courses for $400. I just feel so terrible charging somebody $400 for something that was so canned and just. But I guess there's no. In that circumstance, they should just go trade it. Ethically, they should trade their own system and run that same system, and they should have some kind of support, some kind of blog where they're saying, well, here's what we're doing, trading this fucking golden ratio bullshit, watch this trade, and just say, but you have to also have this, you have to have more than one golden ratio out there, and you can't totally sit on the sidelines. I did that for about a year in commodities. I just didn't trade. I was like, well, fuck it. I just don't have the time to. Okay, so as soon as you see a system, you're going to say, well, I like it on the weekly. I like what you're doing there. Of course, the weekly is very smooth data. The noise is gone because it's fucking, you can't even see it. Can I trade? So the next thought bubble is, well, how does it work on the daily chart if it's good on the weekly, and then you end up on the 1.5 minute chart? Well, dude, you should see this thing on the 3 minute chart. It kills. Okay, great. But are you going to sit there 4 hours waiting for a setup? In a completely obvious area where you're going to see that drama. You are going to see divergence on the 3 minute chart in that zone. But that zone was pre-established days ago, hours ago. If you have a crop of orders, but this is when you're also in the situation, do you want to eat hot dogs, or do you want to see them being made? Most people would opt out. Just give me the hot dog, dude. I don't want to hear the backstory on this, how this got here. But for some reason, well, there's no money involved there. You paid for the hot dog. Give me my fucking hot dog. I mean, if somebody's going to present you a videotape, you're like, dude, I'm not here. I'm just hungry. But trading's not like that. People say, no, I want to make sure this is a good trade. Nobody wants a bad trade. But the hot dog, you see that hot dog and you're like, okay, dude, I've seen people eat these and not die. We're at this stage of the trade. I don't want to see how this was made. And I think most guys have a hard time trading because they want to look under the hood. They would say, well, what is this constructed of? I want to see what is going on. What's making this thing move? I'm not saying that a girl wouldn't ask, but if you showed a moving average crossover system, hopefully tight, like one crosses the three on the 4-hour chart, but you would say they're not going to say, is that exponential or is that linear weighted moving average, and why this moving average speed? I mean, you would just present that to somebody. But unfortunately for me, I said, well, why the 13, why 14 period, why the 20 EMA? Explain this to me. Well, it's just, dude, I could put up fucking a 10, a 30, a 40. They'd all fucking make sense if I cherry picked them for entry on a certain time frame. I mean, obviously people can see that. Like if I just randomly made close without a sizing chart, and they go, yeah, no, just whatever, if it fits, it fits. They're all random sizes, and some people are raving about, oh, it's fucking amazing. It's like packed on 100 pounds now, it doesn't fucking fit at all. So, in other words, there's a sizing issue too there. I mean, it's all great and wonderful till you're like, well, yeah, well, but she weighs 300 pounds. You don't see these runway models. That's a whole different fashion show. That's a different audience. And if you're going to swing trade the guppy with 1,000 pip stop, that's a whole different world. Especially if you're going to do that a lot of money. And there are people that do it. They have a huge position now. They're underwater by 60 grand. And they're like, yeah, well, we'll be only down 30 grand in about 5 hours, I'm hoping. And then we'll hopefully get a retracement tomorrow. We'll be fucking killing it. Then there's people that are down $60 and they're like, holy shit, man. I'm in the $400 into the course. I'm down $60 on this fucking guy's entry. I'm such a good student. And this is the worst crusher, I think, in the world since I'm such a bad student. Well, only that's why I was when I was in public school, because I thought they were full of shit. But when I was paying for my education, literally direct to these people, I did follow what they're saying, but I also knew that judging on their lifestyle, that there was no way it was going to fit for me totally. I could extract their point of view, but I think it's the same for anybody. Like, you tell me the best diet in the world, but in the morning, if I don't have coffee, or if I don't have something that I'm willing to break a routine. I think if you had a trading week that made money, you might say to yourself, well, whatever I did, I'm going to keep doing that. But does not guarantee, especially if you have a one-trick pony system trade, once setup like just a retail goober trading book called the Divergence Entries, say, and you could see all the money it had made. I'm also assuming that you have no regard for volatility in this. When you see the setup play out, to be honest, you probably got stopped out on a couple tickets. Also, presupposing you put on 2 positions and one got stopped out, and the other one made money. People don't want to think in that term. I'm just telling you everything I've seen, and I watch the people on the chat thing, and I'm saying these people just don't see dual trading is an option. There's singularity. Show me It's not called 618 for by accident. It should be called 7.2 through 618. It should be called this through that. Well, nobody wants that fucking answer. How much is your car repair? Well, sir, it could be from 2,500 to 3,000. And you're like, give me a fucking number. No, until we get in there, we don't know. Like, if we open it up, the car up, and we see all sorts of other shit, I don't want to lock in. And that's what you'll see in business, too. People don't want to lock a number in. They're like, well, I can't tell you. We have to see it. And, but it's not, there's not, and that's the other thing, this Holy Grail thing, mentioned a million times, but you have to have Holy Grails. There are millions. The problem is there's more than one Holy Grail. If there was one way to trade it, there isn't. If the guy that's trying to make 8.5 pips, and there's a guy trying to make 80.5 pips, and there's a guy trying to make 16 pips, a guy trying to make 32 pips, and they're all making money on the same day because they know that in this moment in time of their entry and the way they did it and what they either waited for or they pre-planned for and even had a pending. A guy trading on pure pendings could make less money than the guy trading at the market if the guy that trades at the market understands, and dare I say, price action. I would say price behavior is better. Price action is... Behavior is a more dynamic way to view it, where you say action, you're like, yeah, but how fast, how far? And just moving is not enough. It's how much did it move from when it didn't move, and what do you do when it's not moving? Is there a way to... Is this your time to decide which way it's going to move? And take the risk of being wrong and just bracketing the market blindly and losing on the insurance policy of bracketing and trading without any direction plan, pure breakout. But who's the guy that can trade breakout at the market and limit pendings or stop entry pendings? So stop entry pendings, limit pendings, and pull the trigger instant execution or market execution. Blending all three of those and understanding when to use those. Well, on a 24-hour, 1 hour chart, if you're trading at the market, you can kind of see in any given day if you were to counter trend trade that. Every time it's up, you sell. Every time it's down, you buy. There's an easy trade plan. I can name 10 trade plans, but each of those still need to be tailored to the time frame of that price pulse. So in the 24-hour bar chart, the 1 hour chart there, if you pulled the trigger every time it was down, counter trend entry, the market would have to go down. If it went down every bar, it's 24 hours straight down, not one let up. But how far is it moving each hour it's down? And do you have a different trade plan for it? It's really big down or really small down? I do. If it's really big down, I buy with a wide stop, which means I'm risking more. If it's just down a little bit, I wouldn't buy that much, and I'd run a tighter stop. If it's up tremendously, I'm selling. If it's up a little bit, I'm not selling too much. And if I am, I'm not selling too much in terms of dollar risk because I have a tighter stop on that. So if I have a linear size of 1K or 10K or $100 or $500 or 2Ks, if you're trading 2Ks because it's just too much work, now you just cut your workload in half from going 1K to 2K. But now you're more tendency to try to be more precise. There's always a trade-off. Now you're going to tendency to try to be more precise with the 2K because it's twice as much risk, given the same pip stop. And that pip stop would be based on market structure is dictating. I wouldn't put it on the average true range. I put it on the current volatility right now. How long do you want to wait to be proven wrong? If you have 1,000 pips stop and you're trading on a buy breakout on the 5-minute chart, okay. But typically, if you're on the 5-minute chart, structurally, you're trading based on those parameters. If you're trying to contour your stop to meet the market's view of what is an outlandish price, unfair fair and unfair. Fair being the market's dead in the water, everybody agrees, it's fair value. They talk about that in the opening. When he used to watch CNBC, this guy Art Cashin would come on in the morning and talk about fair value, which is the agreed to price before the cash market opens and futures is bobbing around. There's a window there, which is like the Asian session. Then it's like, well, okay, which way is it going to go? Which way the horse is going to go? Now, this is kind of like a horse race it's a bi-directional horse race. Some horses are going the other way. Which horse are you going to get on and ride? The opening bell, right? So the opening bell is like bing, they're off, right? So cash market opens and we have liquidity, and now we have typically more action in the prices, more volatility. Well, did you place your bets before that? Are you waiting for the market to make a price pulse up, buying pullbacks at the 618? Are you at that point there? Even after you determine how much you want to risk per trade, now how are you going to approach it? Are you going to place a grid in there and walk away? And people would say, well, what's the best thing to do? It really depends what you can psychologically manage as far as, it's like, how do you feel about walking around nude? Some people, they join a nudist camp. And then it's not so bad, but some people, they probably, if they're alone, every chance they get, they're nude. And I can't imagine that, because if I see myself in a mirror, I'm just like, I don't care how in shape I've ever been in my life. I'm just disturbed by my own self in the mirror. So I typically would just, it's too much information. And I don't even want to think about that, because I just can't see the world like that. I'm always looking out into the world, and I just don't. That's why you don't see me in the corner of my screen barking away about all this shit, because I just don't want. I guess I don't think I like that great. So even if I did, I'd be. I'm shy built, I think. In fact, being really good looking would be a problem, because I would really have a hard time then, because I wouldn't trust anybody that said they like me authentically. I feel bad for the hot chicks, because it's like, well, are you talking to me because you think I got something of value intellectually, or are you just staring at my, like they say, I'm up here, you staring at my breasts, or my, are you just talking to me from the back? And so yeah, I just want to see your ass. So just could you turn around? We can talk. Do you have a Bluetooth? We could just stare at your backside while we talk, and that'd be up with that. But so you're coming into this trading world with all the typical mindsets you would use in your normal daily life, and they're really not good to use here. Like I said, using the speed limit approach to trading is that you're in a world where you're going to see speed limits that range from 22 miles an hour to 1 mile an hour, to 100 miles an hour in reverse, to 1,000 miles an hour forward. And when the news comes out, you could see 1,000 miles an hour forward reverse on a road that doesn't exist. Just imagine you're in a giant parking lot and you're trying to predict the next move of a car that you just lit a fire in the driver's crotch. And you're like, okay, let's see what happens. The news just came out. Now, you could place pendings at either side of the parking lot, have cones, and write a dollar amount. If you hit my cone, I'm going to make this. If it makes it back to the other cone, I'm predicting he's going to shit his pants forward and then reverse, and then he's going to... This whole thing about, well, he should actually go forward, because the hospital's, fundamentally speaking, the hospital is in front of him, so he should be going forward after all this, monkeying around in the parking lot. And he's like, he doesn't know which way to go, and now he's doing donuts because his nuts are on fire. And like, wow, how is this going to play out? Well, see, I told you to make the hospital. Yeah, but he's now on life support. You're right, he made it to the hospital. And you're going to claim, dude, I know how this shit rolls when people get a crotch fire. This guy's going to go fucking, well, okay, so I was 5 hours late. He's almost dead, but I'm right. You're fucking wrong, see? Fundamentals work. But who's the guy making money from the cones that are laid out in the very first burst of that move? The first price pulse out of the gate, and you're entering on a stop, and there, he just lost one nut, and you're up. Your account just doubled. And now he throws in reverse. He drives to the hospital with one surviving testicle. So who's the, right? I mean, so there are so many ways to make money that it's just inconceivable that people could have a fucking problem. I can see what these people are doing on these courses. They're just trading the classic one-trick pony shit, write a hit song, and retire. You can't. What are you going to do for a second album? What the fuck? What are you going to do for an encore? Okay, great. You made this great trade, this great prediction. Did you do it accidentally? Did you just try? Oh, I just stayed in that trade for fucking let that one. Let your profits run really works. And you walk around thinking, wow, that's really the way to trade. Then you try that 4 more times in a row and give back everything you made on that one trade because you're going to put a lot of weight behind that setup and not realize that it was volatility that made you money. The extremeness of the response to that setup on that time frame in that moment, and you just happen to catch a fucking amazing move, and you've never really lost money up to this point. It also has a qualifier of what happened before that you made this great trade, and have you been trading for years, and you finally can see the behavior of price, and you're authentically good at trading? Or did you just you just rode some fucking stupid 20 EMA and you're like, I'm killing it, man, this fucking 20 EMA, fuck what everybody says, and then you happen to nail some 4.268 and 236 and 423.6 Fibonacci handle exit, or whatever fucking harebrained shit of the 2618. It's like this thing that Stapleton did, the 2618 trade. Okay, I got it, dude. You're saying, well, and it was so sophomoric if you've ever traded that you just die. You're like, okay, well, what we're gonna do here is we're going to measure from here, and as soon as it pulls back, and maybe it did inside this 4-hour chart on the 5-minute, it pulls back here, you're gonna sell it, and you got your stop here, and this is the 2618, and your exits here on this previous top, and you got out and you made money, right? The reason why that's so retarded on its face is that why aren't you just selling on every 618 inside of every 618, fractally speaking, all the way the fuck up to here, and just going, dude, I don't even know what's going on, but I'm actually slightly up on this trade. I was slightly up on this trade about an hour ago because I sold into new highs here, and I'm up on these, but I didn't get out because I think it's coming all the way back to here. Well, you're out of your fucking mind, because if this was your exit, you should have got out of everything right there, and that trade's done. If you sold into new highs here, you know that you have to get out. Now I'm speaking technically at the breakout point, because if this is a real breakout, not a fake out, what's happening is it broke out. Now it's coming back to the breakout point, and it's going to continue like this. And everybody can make that supposition. And some people are going to sell here and do that same trade back to this treetop. Or they're going to get the fuck in here and ride it to there. Or they're short here just to make it, when it takes out possibly this later on tonight into Asia, they're just going to say it's in a downtrend, and I'm selling triple screen trading on the 15-minute chart up into a rally here into this floor on this low. I could go for hours on this fucking chart. There's people saying, well, this is the breakout to the downside. This is the breakout to the downside. So it broke out, and I'm going to sell, and maybe it did bop up in here. We don't even know. We'd have to go to the 15. And this is when people start to drill down for entry. But once you drill down for entry, you see that that trade's over now. That trade is done. If you were the guy that was going to sell the rally into the floor of this breakdown, it goes down, you don't sell here, and let's just imagine there is no spread. The spread has never changed, that this is a real price down here. They're going to sell when it comes into the closing window here. Now they got a triple top. They can claim triple tops work. Yeah, double top here. We retest the double top in this window. You sell here, and you have a stop sitting up here or up here at this mountain peak. And you can say, I'm up on that trade right now. Look at that trend continuation. If you go to half hour, you say, oh, okay. But aren't you kind of like in the you're in this new low thing, it's kind of like, how much longer do you think that's going to keep tanking? Then you go to the 1 hour and you say, oh, I could keep tanking. I'm short here. I went short in trend continuation goober stop entry mode. And I don't give a fuck even if there's volatility in the last bar. In fact, I went short here at the smallest bar. This is the smallest bar if you're running strict stop. And I don't know if this is a strategy, but this is a money management strategy, is that you have trailing stops. These are all trade plans or systems. If you have a volatility breakout system, it was triggered here. Low volatility breaks out. You're triggered short on this 1 bar. You have a trailing protective, protect your profits and your risk. As it goes down, you trail. You're still short. You're up, right? If you got in here, right, you don't need to backtest that. You can see that it's going to get whipsawed when you get into this shit. Breaks out. Uh-oh. Breakdown. Uh-oh. Yeah. Because, yeah, this is Asia. From yesterday's Asia. I mean, this is Friday's Asia. Right? This is Sunday now. This is Friday. Look at the climax on that. The guys that sold into Friday, and this is pretty easy to see in this story. I wouldn't, if I was on the 1 hour chart, and the guy that's this Forex Hangout guy, you just blow your brains out. He's on the 5-minute chart like this. He's looking at this, but he's not trading this. He's like, okay, it's making lower lows, and he's making. I can't think like that. I just don't know. I still don't get it. He's not even. It just blows my mind. Like, wow, what the fuck? I'm looking at this. If I was on the 5-minute chart like him, I'd be okay. Buy limit, sell limit, buy limit, sell limit, no fill. Look at all these trades in here. If you're really on the 5-minute chart, this is the 5-minute chart. Well, I can't trade that. Well, no shit. This is as zoomed out as I go. That's another thing that just blows my mind, is the zoom out factor that these people run. They're like this. Okay, great. But if you're on the 5-minute chart like this, you're buying right now. You're buying right now. Boom. Buy at the market. As soon as I see this on the 5, buy here. Buy limit. Okay, I'm long. I'm buying more if it drops. See you buy. That trade's over for me. I don't need to watch that shit. I just bought pullback. Fuck 618. Fuck all that shit. What are you, nuts? Now if I do this, I'm like, I can't believe I'm buying here. Fuck. Look at the spread. I guess I should have gone short here. I mean, your whole brain's going to change. All you have to do is go from here to here. I didn't change time frame. But here I still like this buy. Infix dips down lower. I still like it. For our chart, I'm like, good trade. It's going up. I got more money. I just made money on another currency or another account. Yeah, let's put some buy limits down here. I could grid trade this thing all manual. Let's take a look at... Are you up for that? Are you up for getting filled on those tickets and being wrong in the end? I'm still in this trade. I don't know if I'm underwater. I guess I'm underwater. I guess I got in down here and never got out on these tickets. So here, the 4-hour chart. Oh my God. It's kind of rangy. Oof. I could have got out here, and here, and I could have got out here 12 hours ago and been up and reloaded. And if I would, I'd just come in here and do the same. This one I am running strict drops. Buy limit all day long, buy limit all day long. Now this is what makes it easier, is that these are predefined $5 risks. I'm risking there. Risking that. What's the trade here? It's too easy. Every 50 pips I'm buying. All day. All day tomorrow. I'm buying up pullbacks. Okay, next problem. I'm buying here. I think I'm long here, actually. Yeah, I got filled on these 2Ks here. I could take that trade off. I could also do this. Now, here's another big problem. People commingling all these currencies. Turn off commissions. I'm going to go for symbol. Which one? You can't see this fucking data in here. Windows is so fucked up. I'm going to take off the winning tickets in New Zealand dollar just to clear up the... Just take some money. I'm not going to let my profits run either. Where's New Zealand? I've only got 3 here. Okay, they're actually underwater. I don't know why. Oh, we're only down to swap. I'm looking at the wrong thing. Okay, so I'm going to take these 3 winners off. And now I'm going to go to... I don't have to worry about that currency pair now. I'm going to rinse and repeat. I'm going to get out and I'm going to put buy limits in. And this is the drudgery of it all. Here, I have no trade here. Okay, I'll buy here. I'll buy here. I'll buy here. Next problem. Let's buy here. If we dip down here again. And that's trading. On pendings, this is the easiest trading you'll ever do. You don't have to, you just let the market come to you on this stuff. I'm going to take off these winning, I got New Zealand, pound New Zealand I'm up on here. Take a look at the chart. This looks like it's going up. So I'm going to buy at the market here. I think this is going to go up all week. I'm also looking at this huge void above us. I'm going to take off RSI. So you should be able to make really fast. Your first guess is your best, I think, in these markets. Let's get rid of this. It's too much to explain. All it does is convince me that I don't need it. As I can see the structure of the price better. Here's the 4-hour British pound. So here I'm buying, and this might be 20 pip handles here. I'll just get rid of that. 10 pip handles, that's why it's so ridiculously taking over the screen. There, just buy limits here. If it pulls back. I know it's all predetermined risk here. Buy limits if it pulls back. Sell on new highs here on the dollar. I'm going to sell up into strength here. It looks like dollar is going to, on the monthly, dollar Swiss is going to blow out the top here. I don't know if that helps. Anyways, like I said, you have to be comfortable with incremental risk and losing. So what you're going to want to do is find out a number you can tolerate and just keep plugging away. I mean, it's so no different than I always go back to guitar because I play guitar and played it for years, and I spent a lot of money on guitar strings, gear, and experimenting with rigs. The guitar string is a known expense, the spread. I mean, you're going to wear these strings out. They just lose their brilliance. I don't care what they're telling you, how long they last. Unbreakable fucking $20 strings. It's the same bullshit. They get a dent in them on the fret, and they don't resonate. This is known expense, plus the electricity to run your rig, plus driving out to the store, plus your frets are going to wear out, so there's maintenance. Just because you're trading on MT4 platform and really just using your mind to trade, and the clicking is not, you might wear out your mouse, but other than that, it's not like the scripts are wearing out. So it's not the same. I don't know what to say. You have to find a number you can tolerate, and you have to look at it. It's like anything else endeavor. Is that you don't need to know how to build a car to drive one. You could buy a used car and drive it around and tinker and then just make it okay not to know everything about it. But are you going to race cars for a living? Or are you just a trading enthusiast and you like the idea of kind of, putzing around in it? And I get the feeling that's what the Forex Hangout guy's doing. He doesn't need the money. He's in there just putzing around. And not that there's anything wrong with that. Well, some people want to kill it. And some people want to just treat it like going to the titty bar. They're not looking to get married. They just want to have some fun. And there's no, you can't say, I guess if you go to a titty bar, it's like, are you trying to get a serious relationship going, or are you just trying to have fun? And the discipline, unless she's beating you, tied up, I get the discipline trader. I don't know if that's you'd have to define that because your discipline could be that you are out of your fucking mind, but you're consistently out of your mind and you're making money. As soon as you kind of like take away the, it's like the pain that you have to write a song. People that are happy aren't writing good songs because there's no story to tell. There's nothing to relieve themselves of. And so if you're not hungry, and what is making it so that if you're losing, that's what is going to make you reconsider how much you want to donate to each trade plan. So if you amp up the amount of trade plans, you're talking about more work, and then you'd have to, your next, it's counterintuitive because the next thing you're going to think of as soon as you want to trade more, well, they better be higher quality trades if I'm going to trade more. You're always looking for the optimal trade entry, as ICT would say. There's no optimal trade entry. There's entries, and there's, I don't know if I'm explaining it, but that you could be in a winning trade. You could be up on a giant trade that you entered 5 days ago. Meanwhile, some guy's counter trend trading against you on the 15-minute chart, and he's making the same amount of money that you made to the point that you're at now in that trade. Because he's a 15-minute counter trend price pulse trader, and he knows when he sees that what's going on, and he can also see in the larger structure what void's being filled and killed, and what's being humped and dumped. He can see that. And maybe he's trading at the market, babysitting, waiting for that, and he's an alarm in that zone. Maybe he put pendings in at the same place that you would probably logically have to be cashing out if you understand breakout, pullback. If it's not a fake out, it pops through, it breaks out, and you're aware of his trade. You should be able to see the other guy's trade. You should agree with the guy that has the other trade. The only thing you wouldn't agree in is what size and what time frame, because when he's cashing out, if you're going to counter trend trade that, he may not have the mental flexibility to dump and come back and counter trend trade also, and take one instrument and play it in upbeat and downbeat proportions. The other thing the guy said in the Forex Hangout, he says, the same guy that was talking about the range trades that he's done, he says, do you trade every wave? Well, if there's waves, why aren't they trading every wave? But the surf guys do not surf every wave. They wait for wave 3, which is the biggest wave in Elliott wave. They're going to wait for wave 3. They can see 1 and 2, and they would 1 and 2. The amateur surfboard guys are going to get out of that. But maybe they want to just practice trading 1 and 2 because it's less risky, pip wise. If you have a fixed size, the pips do matter, and you want to just trade dollar Swiss franc on the 5-minute chart to get your feet wet. You're still learning how to surf. You're the mechanics of the surf, but when you trade wave 3 in the surfboard world, your wave 1 and 2 is a setup for you to get ready to swim out there. Wave 4 you may not trade because this is when the wave curls and crushes and it's too long, and it's not peaking. The harmonic's not there. You're not at the sweet spot. Wave 5. Okay, maybe that's a safer wave to trade, and this is the last wave. But when I thought about it, I said, well, obviously the most efficient way is to make, you're not supposed to be able to do this, but get rich quick, that's wave 3. But that's time frame dependent of wave 3. And if you don't know, wave 3 is, look up Elliott wave, wave 3 is the biggest wave. Everybody agrees wave 3 is the biggest wave. Wave 4 is consolidation, wave 5 is the final wave. In a perfect 5-wave sequence of any marketing time frame. But then there's, unfortunately, the exception that proves the rule is the extensions of wave 5 and the ABC correction inside of the counter trend moves, the ABCs. That's why more were sold at higher prices, the entry, because A, B, and C is the biggest wave of that. That's also the third wave. That is the pullback. The wave within the wave. So there's people that are they see the Elliott wave in the bearish mode, and they're both right when their time frames overlap in such a way that does come. That's how that is. Because that's pretty technical, but like coming down to rock bottom metrics of what is upsetting you about trading and why are you overanalyzing is because you can analyze now. You can also go on YouTube and watch many a video, and you can buy many a course now. There's courses all over. When I was doing it, it was kind of hard to actually find a guy that had a course, and you had to go to Stocks and Commodities magazine, which I just saw an issue here that I had. I still got. I thought I would. That was just a $5 magazine. I think it came out like once or twice a month. And this is the only source of Stocks and Commodities was a high-end, small, thin journal. I had to go to Borders to buy. And that was it. There was no internet. And then now that it's here, people take these canned... You could teach a candlestick course and have real trade plans and everything. You'd probably do a better job if you gave a fuck, or if you could think outside the box. But it's not just outside the box. It's outside the box says. There's more than one box. You have to be able to think outside the circle, outside the hexagon, outside of 5 hexagons. You can't even adopt anybody's one trade plan and live off that. Well, I guess you can. It depends who you are. Like once you open the box... Pandora's box or whatever, once you see the possibilities, you have to, not only you paralyzed by the analysis, but paralyzed by choosing, well, which style do I want to trade? And being comfortable is not always a good thing. So if you're finding comfort in something, now you could be atrophying and you could be not growing. And I've heard all sorts of bullshit about these markets. Well, it's very competitive, and the smartest people. You're trading against the smartest people in the world. No, you're not. You're trading against yourself and your own fears and hopes and your own over trading. You're over analyzing. Can you underanalyze? Can you overanalyze? Can you undertrade it? Can you overtrade it? Can you oversize it? Can you undersize it? Yeah, you can do all that shit. And I guess that's why people that race cars know how much throttle to lay into the turn, and how far they can stretch it before they go to the pit, and that's their margin. How much leverage can they get on a turn, and if they're sharing the turn with somebody else, is it... now here's the only where the analogy breaks down is you cannot manipulate the market like you could somebody in a race. I could come into you in the turn and give you the sense that I'm not going to give you room on the turn, but you cannot give the market any sense. You're nothing but a passive participant in a fight that you're betting on in your living room on the TV. You can yell at the screen all day long, which I never understood. My dad would yell at the screen. I'm like, update, note to self. These people cannot fucking hear you. The market cannot hear you yelling at it. And I've yelled at the market many a time going, what the fuck? You're fucking kidding me. It's going to keep going. Now, this is when I was totally committed that there was no other view than my view. Since I studied so hard, I must be right. It's so hard to let go of the connection between being intelligent and correct about the nature of things and even the fundamental reason the market's moving at a certain price, that is going to, you're just going to hold on. You'd also tell yourself, rationalize that, oh, I'm supposed to lose, so this is okay that I'm so stubborn that I'm going to sit in this trade based on fundamentals, when clearly whatever's going on, and I guess until I discovered this vacuum concept or this path of least resistance that it's described by Bill Williams, if you look up this path of least resistance, is that, and I kind of didn't, when I thought about that, I thought, what does he mean? Which path? Well, basically the fact that there's nothing stopping it. And especially if it's going into these fresh prices that nobody has a conception of what that's worth. And of course, the market trades sideways too long. The pressure's building up on both sides of that. And what is the macro path of least resistance is going to be those larger time structures where there is a void that maybe goes back 12 years. And as time goes on, it's going to be fascinating to see what happens with these markets, because they are building up quite a history of data now. And it's going to be like 5 years from now, you'll be, oh yeah, just like I thought. Yeah, we filled that void. Now, you could have held that trade for 5 years and said, see, there you go. That's trading. Or there's, like I said, there's a guy on a 15-minute chart going, see, 45 minutes, 3 bars, that's trading. And them being both right, but the big crusher is going to be, what if they came out with a book and some kind of like Better Business Bureau of trading books came out and said, this here is the most award-winning strategy, has made more money than any other strategy ever done. It's just completely documented, not fake results. Turns out it's a monthly trading system. Well, if you're a scalper and you only want to be in the market for an hour, you're just going to say that's off limits to me. Or you can take the concept that's used in there, and maybe it's applicable. You can take it and scale that down to the 1 hour chart, that setup on the monthly. But maybe it's a fundamental trade that played out just by happen chance into, without regard to what's really going on, what's really driving the price. You just happen to be right on a fundamental call in the market, and you were never right again, but you made enough money in that one time that now you've won some championship, and that system won it. I mean, this is not, this happens all the time. I mean, look at this guy, Garrett. Have you ever seen this Garrett trading? I mean, some of these people made so much money in the crash of 2008. They have a career now because they supposedly could make that call. So, and people would follow that person and tell you, oh, but he made all this money. He knows what he's doing. Maybe he does, maybe he doesn't. Just because you make money doesn't mean that you planned it even. You could have been a mistake. You never put a stop in it. And the market went in your favor eventually, and you're like, good thing I didn't put a stop on that. And now you're going to trade without stops, and now you start maybe blowing up accounts. So whatever you do that you think you cured something, one thing you can say that the market has over normal life is that it's guaranteed to, each snowflake's unique. It's guaranteed not to repeat itself. It rhymes. Mark Twain says the history doesn't repeat, it rhymes. So you have this. It's going to go up-ish and down-ish. It's not going to go in a perfect price pulse. It's not going to be a perfect batwing. That's the utopian view of trading, that it's going to be this, you've cracked the code, the Da Vinci Code, and now everything should fall in line. I mean, I used to think all this stuff on some level. I knew it was bullshit, but I thought, well, maybe there's something here. I mean, let's give this a fair shake. If the markets are organic phenomena of human behavior and price pressures, then if it's a natural system, that my Fibonacci tool should work based on the fact that, yeah, there's only so many rabbits can fucking make other rabbits, and it looks like a perfect, yeah, the markets are breeding. You can make the arguments to the end of the world, especially if you're a sloppy thinker with bad fucking logic, and you have no clue of being rational or reasonable. You can fucking mash up a whole fucking convoluted story to say, yeah, see what I tell you, look at that. And people would be like, oh yeah, this guy knows his shit. Like, listen to this guy. Look at this depegging over here on this fucking chart. Look at this thing in hindsight now. Look at as we drift away from the depegging incident. Look at that. But people lost brokerage firms on that. And you could also make the argument of, well, why didn't you have pennings down here in new lows? Huh? In 2015, how come you didn't have pennings down there? I don't know. I never thought about it. Just didn't think we'd ever make it down there. And I don't know if that helps, but I could go on forever, about this stuff. It's just, you just really have to pick a risk level that you can get callous to. So maybe you start off with a 20 pip stop, $2, and you trade all week, and you trade trend, counter trend, and you could actually make money. This is going to be the hard part. If you make money with being wrong because you just happen to, and when I say being wrong is you get in and you're down 18 pips, they don't stop you out, and then it finally goes your way and you're like, fuck, man. A part of you is going to say, I could have got a better entry, so I was wrong in that sense. Well, what do you consider being wrong? That you didn't get out when you were up and you could have got out? And you're kind of wrong in the sense of just not taking the opportunity to profit from it. Never hit your target. Okay, so if you have a specific entry and a specific exit, locked in stone, one ticket, your probability of being successful is lower than the guy that has 2 entries and 2 exits, and he has the flexibility of taking something off, moving the stop on the other one. In other words, how do you survive is diversification and flexibility. Can you get into different prices and get out of different prices? And is it okay to get out when you get to the point where you're not psychologically in the market so you can perceive reality and see you're totally wrong? Why wait to get stopped out with a 40 pip stop when you can see that it's just not going your way? Or you don't want to waste the time for them to drip down to your stop and finally stop you out. Or would you say, well, I'm being a disciplined trader. You can see the problem. I'm a disciplined trader. I'm going to ride it out, and maybe they won't stop me out. And, of course, the worst would be the paranoia of saying, well, they can see my stop. They're going to run stops, and they can see my stop. The market's out to get me, and what's the point of all this? If I'm going to put a stop in, they're just going to hunt it down. Why put a stop in? Don't put the stop, no hunting. So you see the samurai trader does that with real money. You can flip an account. Yeah, you can flip an account because you're risking the whole account to flip it. It's laziness. What we'd say partly in laziness that you didn't want to predetermine the risk per ticket. So maybe you have 15 pip stop at 30 and 45 and you run those 3 tickets all day long and you've got double your money ratios. Forgot the spread and the commissions. And you plot a line like that, but then the market dynamics change where the markets are swinging up and down 1,000 pips because they've murdered the president. And who's the vice president, right? And then they're like, if you think it's chaos, if these snowflakes think it's chaos now, can you imagine if the president was assassinated? What would the markets look like then? And could you make a fundamental argument? Well, any argument would sound reasonable. Gold could either go up or down, and I can make an argument for why it did either and be completely sound reasonable in my newsletter if I had one saying, yes, gold went down because there's no hope for the world now that we've lost our fearless leader. If it spikes up, oh, see, thank God our leader was corrupt, so the market loves it. This is the other big, huge problem is confirming things based on, you don't have a double-blind study there. There isn't another planet with the same fearless leader, so you don't have the double-blind study to prove that this is the true cause of the effect. But if you have a newsletter, you don't want anybody to even entertain that idea because they're going to unsubscribe from your newsletter, and they'll say, well, you don't know anything better than a coin flip. So it's pretty fascinating trading from the standpoint is that people come to it to make money, but it turns out they end up learning about themselves and what they can tolerate for pain-wise. I guess the same thing about sex. You show up, you get married to somebody or you're banging somebody and you realize kind of what is your limitation. You're learning about yourself probably more than the other person. The other person's just there as a conduit, as a vehicle for you to discover what you can tolerate. And it might be the hottest person in the world, but you can't listen to them chew with their mouth open. And you're like, you don't want to tell them if you do, maybe they're not going to bang you no more. It's a real tough thing. The market actually is pretty objective. It can't see you, which is hard to believe if you think they're hunting your stops. But you do have there are advantages and disadvantages between the real world and the market world. Oil's pulling back here, which I could see that as a huge trap here, and I think oil could be melting down finally. And I think we've captured the flag up here it's a false flag up there. What's going on? No, we've come up here, and I think we could possibly trap that. I do think the stock markets are going to melt down. But these are all just, ego predictions, and I just see it, my copper chart's not updating because the contract expired, I think. Here's gold. Gold had a good bounce. I think gold's still doomed in the big, long picture there. Everybody cashed out in the floor here. This was the exit. Didn't quite make it, but this is why you have to be peeling shit off the table as it goes up. I don't think you can ride these things. Oh, here, look, I'm getting filled on these buy limits, so there you go. Look at this, beautiful. I'm going to put more buy limits in. So this is a trade I could walk away from. I bought one at the market here. I said this is a breakout pullback, and look at how the sellers that sold up here and are looking to ride it until it hits here. So their target would be my entry, and I just put a buy limit here. How do I feel about being down on 8K here right now? I don't care so much. I'm okay with that. So getting used to pain, I think, is going to be the ultimate. And the pain of not knowing, and this is why people sign up for courses, because they want to know, how do I do this? But if you have I hate to deter people from trading, but if you have a job that makes good money and your wife's still hot and she still loves you, and maybe you don't need trading, or you want to get a hot wife that nags you to death, and you want to make money so you can, get one of these women like that and get some more chaos in your life, and maybe that's what you want. And so, if it's a goal, as a stepping stone, a goal to a goal, yeah, I want to make the money so I can. It's like that old cocaine commercial where I can make more money so I can buy more stuff so I can make more money. And this guy's like tooting like airplanes up his nose. I don't know if anybody's seen that. But it's like this vicious cycle, as I would call it. And so, yeah, I mean, you don't have to trade. And if you're trying to escape, like I said, if you're eventually trying to escape yourself, and if you make enough money, you won't have to worry about certain things that it's not necessarily true. No matter how much money you have, you still have to be able to function, because you're going to have to sleep. I guess the idea is that if you made so much money, you wouldn't have to sleep, kind of thing, like you could do anything you want. And that's how they used to sell it on TV, financial freedom. But yeah, I mean, if you have money, you're not free. Now you got to worry about, where's your money? Did anybody steal it? Is it earning interest? Is there a way to use it efficiently? If you don't use it, are they going to just take it from you in taxes because now you're not putting it to use in a business? So if you have a business, then you can write off your computer. If you have maybe that's why you have a prop house, because you just don't want to pay taxes. So what you do is you just buy all the computers, and then you take a few home and you just run those at home, and you're using you're using a free computer because your business bought it. And you just take every year you buy a new computer for the office, and you take the old one home. Who's not doing that? Who's not taking advantage of the fact the industry they're in is you're just like, oh, I put toilet paper in bathrooms for a living. Wow, oh geez, a couple got lost in my house. It's crazy. I can't believe it. I can't believe I ended up with, of course, my dad family used to own movie theaters, so we'd bring popcorn home and bowling pins and stuff. Whatever we got, we bring here's a big bag of popcorn. Of course. Break a chunk off for home. Who knows what people's motivations are? And like, some people want to brag that they've conquered the unconquerable markets, and they predicted this and that, and they're a guru, and now they got a newsletter. And that's other than the Holy Grail, the guru is the other kind of hot button word that people, he's a guru. Oh, he's a guru for his own. Like I said, I got a buddy that surfs couches. He's a guru at that. He can couch surf. He home sits, He stays in mansions and he lives like a king. It's not his house. He's found a way to live a lifestyle without having to participate in, he doesn't even, he's completely invisible. He's just floating around. He's a professional couch surfer. And some people, that's just a perfect fit. And then some people want to wear, like I said, I know people want to wear a coat and tie and show up at a prop firm and be a very important person. This is where the VIP came from. New and improved VIP. So yeah, I don't know if that helps. Like I said, I could go on and on about it, but in the end, it's going to come down to your comfort and discomfort level and being uncomfortable. My Tai Chi instructor said that if it hurts, you're doing it right, which is not always the most greatest blanket argument to use. But if you're doing squats, this is where you, bend down without using your back. I don't know what squats are. I'm assuming people understand exercising, but say you're pressing iron, as they say, and it hurts. So it means you're tearing up muscle and you're doing it right. In terms of you bodybuilding, it's going to hurt. And if you're trying to build your account, you're also trying to build your coping mechanism for being a total fucking loser, which you are the moment you pull the trigger, in a sense. From a binary sense, the moment you put the trade on your underwater, at least the spread, or the commissions. Because if you're not paying a spread, I guarantee you're paying commissions, and if you're not doing that, you're at least paying for your internet connection to pull the fucking trigger in the first place, or the transfer fees of getting your money in and out of the brokerage firm. You have to make that up somehow. So it's not a perfect, you're not going to be psychologically able, you can't claim, here also we have the 4-hour chart, I'm waiting at the end of 4 hours to pull the trigger at the market, I'm getting filled on limits here, and I spread my risk. I don't have a hard risk. I think that's a failure. Hard risk, why do people want to go the hard risk? Because they've done all their homework and they know the optimal trade entry. Well, there's no such thing. It's a myth. There's optimal trade entries. There's also, if that's true, then there must be an optimal trade exit, and that's rarely spoken of. If there's an optimal trade exit, there should be an optimal trade exit. Otherwise, it's not complete. The trade's not even complete. The exit is as important as the entry. There's people who write books about that. Anything in this business could be singled out and said it's all about the range. It's all about the risk. It's all about the target. It all matters. But if you over-focused on one category, then you're missing the diversification of your focus into, just like if you own a business, you can't be so dialed into a particular color theme, because there's going to be people that want to have different stuff in the menu. Just because you like that shit, I've met these girls that want to have a business and they want to set it up for what they like, but the public's tastes can be so crude and shitty that you have to cater to the crowd of people that are shopping at your place. You cannot be saying, well, they got their head up their ass. This what this Michael Norman's saying is that the market can't see the fundamentals yet, and all the idiots that are trading this thing that's making it that's going up, that they're all full of shit. Well, you're making an us against them argument. That's why they say the market's always right. No, the price is always right. And we say the market, you think of people, because, yeah, if the big boys are right, are the big boys trading against the big boys and killing each other? Well, which big boy's the biggest winner of the big boys? And that's why the market's moving because of all the boys. Not the big boys, it's all the boys. Everything's being triggered there as the market all those guys, the scalpers, they're all, and it's like the micro. So how are you getting the waves out that you're surfing in the ocean? Well, they're from little waves that stack up harmonically and create a tidal wave or a surfable wave. They say like every seventh wave or something, but there's like the people that can identify the waves are about to harmonicize and give them a surfable wave are the people that would start paddling out to catch that wave. And metaphorically that works because you can't really control the waves that you see in the ocean if you're a surfer. Your body, you're paddling out is not increasing the pull curl in of that wave in the least. So that's the best metaphor I can think of, is you're a surfboard guy. And in fact, I was on, this is 10 years ago, I was searching that quite deeply to hear interviews with surfboard guys and say, okay, we can draw a correlation here. How to play a wave. But are you gonna surf wave 3 now? If you're in competition, you have to surf wave 3 because that's where you're gonna make the most. This is the most dramatic wave that's the culmination of all those waves giving you this big fucking wave. And the guy that can get out there and get on it and get the start at the right edge, come in. So when he was a kid, I used to watch Hawaii Five-0, and the opening of Hawaii Five-0, these guys, and I'm like, God, these guys are fucking. How are they getting into the curl? Well, they're getting queued up just right. And now that is a market trade, though. That's not a pending order. They're not sitting out there as a limit order. They're having to babysit that trade when they have to paddle out to it, get on it, get in it, ride it out, be done. They don't have the ability to. But the market is easier in the sense of that. I could have sell limits up here. I'm up on every trade right now. If I sold here on limits, I'm up on that trade. I'm up on all the limits I sold into here. And did I get in on the stops here? I could have cashed out and gone short on the 1 hour chart. I would have gone short here. Like I said, on the volatility breakout bot has been making money. Don't forget what I discussed about 20 minutes ago is true. Never a higher high. We were running trailing stops. We got in here at the smallest bar. We're up on the trade. We're up on the trade. We're up on the trade. As soon as it went below here, I'm cashing out. Now I'm buying into it. The guy that's short is saying, oh, look how right I am. And I'm going to buy all here. I'm going to buy more on all new lows here. I'm just going to go. I don't have stops on this shit. It's only 2K. There's a bunch of money in the account. Just let it go. Are you okay having this? I love this trade. I just love placing pennies here and go, come and get me, bitch. Bring it. Come on. All the way back to here. Now I can see I want to put buy limits down here. And this is where I'm sure these people like Ranco and all these goofs, I suppose you're just going to, yeah, why not? Why wouldn't I buy low? Well, the argument is that you shouldn't trade like this. You should wait like a disciplined trader and wait till it gets below here and see what kind of candle you get. And if you get a bullish pattern on that candle, then it's okay to pull the trigger. Sorry, I'm not that guy. It's stupid. Why don't I just put the orders in right now? Well, because I want to see what happens when it gets down here. What kind of price action? Okay, so you make judgments of that. On that, then you should watch every 4 hours. You should be making a decision on that kind of. You're making it too complicated. This is a good price. This is a good price. A few videos ago, I talked about this price. This price here is the price you want to buy because it's the fresh lows. Here's anything below here, it's all good. The question is, are these standard lots I'm buying? Fuck no. Because I want this to be a incremental fill. Soft entry, soft exit. I don't want hard entry, hard exit. I leave that for the gurus that you could still have a hard entry here, but then what if it never makes it down to here? So there's a possibility we're never going to make it down here. How do I want to get in? And that's going to be your pain threshold level. And do I wait for every hour it's down? So we're going to, in about 14 minutes, we're going to be at the top of the hour. Would I buy at the market on the 1 hour chart? Oh yeah, I'd buy with a wide stop. And I might buy more than usual with a wide stop, which even increases my risk even more. I might be buying right here with the 100-yard line. So I'm buying, maybe I have a pending here, definitely at the basement level of this bar. I've got a buy limit. So I already got filled on that because I put that in earlier. And now I'm going to buy at the market. And would I go to the 5-minute chart? I wouldn't go to the 5-minute chart because I can see in my mind's eye the 5-minute chart. Probably got its double bottom. As soon as this, in 3 minutes, if this closes up, we'll have a confirmed double bottom. Fixing the scale. Now this is the weekly. Fixing the scale. It's in an uptrend. Are you buying on pullbacks? Is there a 618 there? No. It's pulled back. On the daily, it looks like a great buy. On the 4 hour, it looks like a great buy. On the 1 hour, It looks like a great scalp. That's about as far as I'd zoom. Got buy limits all pending in here. I would just love it if they rocketed this down here, but I'm giving it all week to get down here. You're actually giving it the end of time because these are no expiration on these tickets. I'm giving this to the end of time to fill. Buy limit, buy limit, buy limit. Anyways, I don't know if that helps, but that's the way I see it.